Uh, okay, token analysis on this web. So I start with the monthly, daily, and finally, uh, so along with them, see what you can see. So the starting off in the middle, you can clearly see we're having a ranging market around that level. This is all the way from 2017. We broke below that zone around 2022, went lower, and we're currently putting the resistance from the Russian point of view. So market pushed lower, came all the way to this low, we started to see another push on. So currently just spoken about that level, and you can see a break of that level. Ideally seeing another 2 months of sellers trying to push lower. You can see clearly from this is type of price action that the market is forming. So if I was to check out this, then ideally I'd say around this level is when we last made a low. So I'm characterizing the low by formation of 3 candles. There we have a candle, ideally another candle with a low here and another candle on the right. It makes a low, but that does not go all the way. Yeah, it gives us something like this here. So you can notice all the way from this zone, here from this level here, we've not formed any other candle that will significantly be seen as a new low form. So that is, unless this candle now, this week's candle now, then this monthly candle, the December, the is closing December, fails to break lower than this. Okay, so that's the first thing. Ideally, from the monthly, you can see, even from the monthly, you can see the market is pushing high. You can see all the way from January, so that is January this year. We had 1, 2, 3, 4, 5. Only had around 5 months of redness, red candles so far. And it had 1, 2, 3, 4, 5, 6 months of bullish pressure. So we can actually see how the yearly candle looks like. The candle open at this low, one slightly lower, giving us that way. So then the market pushing high all the way to this side. And now we are seeing another formation, pull back on this candle. So if you were to go to create this candle, then you will create it as an opening there, small way to the lower side, push higher, and ideally another week from there to rise high at this level. So that's the yearly candle. This candle will be candle indicating bullish pressure. Yeah, so that's it. So from the monthly, so what else can we look at? That's ideally that whatever I've said is dependent on how the market closes. You will ideally see this market push higher during this month. It push higher, and after then candle may change, or we see another. So that's a bit unlikely unless something drastic happens. Is when you can say ideally the market coming lower too, or test this close here. That's, I think that's the current scenario that we could anticipate. Okay, so I don't from here become interested in some of the key level limits that we have. That is, first of all, we have this candle. This is a bit far away. We have that closing high there. That is all the way from 1st of July 2015. So, monthly. Okay. I'm interested in the next one. Let's say around that level. Notice we had this. This is February 2021. The month. That's right. So we have that one there. And start looking higher. Where will we market start moving higher? We can ideally see the market will ideally come to that high. And before moving to the other side, then we have this support zone around here. So if you look at this support zone being the nearest one, if we get a push higher, that ideally where we could expect seeing the market move higher. So this is April 20. So this is the monthly. Let's say April 2016. Something like that. So this on the side. Let's do it like that. See? And then after that, if you start pushing high, is when we look for this level here. You can see this levels in the weekly. This one. And this one. So if you start to push lower than this, maybe anticipated. I want to see a break of this low, ideally. This low is the one that is holding the market for me. Break this low, then that opens up doors for another push. And this one is around April. April 2024. Closing. Just a look. Okay, moving on to the weekly. So this is the probably here, then it will like that. So this is where the market open up. This is just a monthly range here. So what can we see? Comes out this movement, you can notice that the market pushed here. We are still moving higher, ideally. Try to see this market break here. So you see that movement there, the market opened up. Yeah, came break, broke that low, that high there. Then it came back to test this zone 0. We did break, move lower with the week, so we move high. So then you have this zone here. Needed to break in order to continue moving higher. We did break that one, came back to test that zone. Yeah, we got this level here as the next high that we needed to see the market break. Moved high. Remember at this point, this is the level that we want to see the market maintain. For that, we need to retest this low. I'm going to retest this level. This is the guy. Here was our high. Again, we got a new high on this level. The price of the market pushing higher. Again, the new break here pushed higher. So giving us this current high here. The that you can notice the market came up to retest this zone here. This previous zone here. This zone retest being out higher. This is the market trying to push us. So at this point, we know that we have this as a high. So this one becomes a high here. From the weekly, right? So what does that mean? It means that if you want to see the market continue to push higher, or if the market wants to continue to push higher, we need to see a break of this level. See, we anticipate the market coming to either retest these levels higher, these levels here. But if we fail to break that one, then we start looking for break of this support zone here. So any break below this support zone will indicate possibly a leg lower. So from the weekly, what can we see? It's highlighted from the weekly. This is a wave result of process. So we have this low here. From the weekly, this one I started here. Very soon. It's happening on February, August 2024. But that's when we go that way. And it's all open. That's it. Consider the camera like this over here. There is a here. So we call it this as a weekly, give that 30 minutes. So that's okay. Oh, okay. From out here, that's another. We start. So I'm just going to put this. So notice this one. So that window has to be on here. This is a level I can review. And gateway, let's forget that gateway. Well, let's take this thing down. Like that there. And yeah, want to sit on the daily. There. Ideally, then we have this. So yeah. This. Now, when you go to the lower time frame, you notice that you have a lot of it. Okay. Let me just return this one. So this one happens to be current high. So right now, it's the high bid. This one happened to happen on 30th September. So that's the data point. So can I move on to daily? So what can we see from the daily? On the daily, what I do, I'm interested in maintaining analysis within this zone here. So I do know that we come from the monthly, you can see the market is pushing high. The weekly, we identify this zone here as a day that started that move. And from the daily, we just even concentrate on this zone here. You can see that we have this market here. Look higher, we came back to test that level. Range there, we came lower, then you got this block here. So ideally, you just spoken about the guy that this is a guy that started move lower here. So if you are going to continue pushing lower, then this is a guy around here that you wanted to see the market maintain or respect. So however, I can notice just pocket high. You just pocket that guy and you're trying to push high. So we start maintaining our focus on this level here. So come here, take this, and this, this. So we'll change this. This maybe. Then it comes one of the daily. This is a guy started move. It has since shifted to be the guy that gave way. So come here, put it on the right, want to see this one, see this plus, then you come like this, like that. So that's the guy. This is the guy here that had given us this low, this previous low here. And that's the guy that you will have wanted to see the market maintain below, but continue to see a push lower. However, that did not happen. Notice yesterday's candle closed higher than that, indicating possibly the market will like to push higher to the test levels. Notice you know what you need to trade to continue with the bullish momentum. Okay, so we could maintain a tally. So we notice let's see here to maintain a tally the text. Okay, this is this text. So get this text here, I would say that is not as a monthly. Weekly. Still bullish. The retests. Yeah, let's start it more approach. We go to the one daily. Yeah, bullish. Approach. So what can I say? Bullish approach. Bullish. The bottom. Down. Yeah, that's the top. And so yeah, so that's our target all the way. So pretty clear. The market is pretty bullish. So pretty bullish. We know now we're broken this level. We're looking to see the market. We have a target zone. We want to see the market come on to test this high. This is the back here. Oh, September 2024 high, right? So now we move down to this low here. Move down to this zone. So at this point, I know we have a high around here. Around this zone here, and I know I'd be interested in now this bit of the chart. Why this bit? This is because at this point is where notice this is where we did come from our weekly, came to test our weekly, the day that started move. Okay. So and we came down to that this daily move came lower, pushed high, even gapped here for level. It's better to see this market, this gap fill, never we left that gap, moved high, moving high. Notice what we're doing here, we just put the structure high. Structure high, came back at this point. We are thinking, want to see the market either respect this zone, right? And that will be our process. Want to see the market either respect this zone to push lower. If it breaks higher, then we go for one market moment. We did move here. At this point, we wanted to see the market can go test here and continue low. Then we move, came high, we did break. Broke. No, it kind of broke here. Then you can be looking at that level again. Yes, so we come back. So ideally, so you're saying before we can notice that the market broke high, and you came here, got a high around this level. Around there, and all this move started around this low here. So then we go there. currently you see the market trying to push higher. See, so 24 we have that high. We are seeing this, we'll say that this here happens to be and also all this is our guy from the core that started the move. Come here and label this guy. This is our core. Yeah. We just broken about this level, so that level here that we retested happens to be a previous high and the guy that a previous high, and now that has turned to the guy that gave way. So currently this is our high. We've broken that high. Ideally, I'd say I want to see how this candle closes. So this candle closes in an hour and 40 minutes. I want to see if it doesn't have that level, then what does that mean? What does that mean to this chart? Okay, so that means that we change then our perspective. Now this guy here will happen to become our guy that gave way, similar to this guy, and if that's our get to give it, then this one ideally around this low might will actually be the guy that started this one. So we need to maintain above this load if this candle closes here. However, if do not close there, then we still have this range that we can play around. As long as you maintain above this level here, then you can play around this range if possible. As we look for possible continuations high. So what we do. Overall, we're looking to see the market will come to test this 30th of September high. But is there another way that we can look for areas to manage our trade if we get into a trade around there? And so it has to be. So one of those ways is to look for, let me just see the best chart that can give us. So this move here, break structure, went higher, came low, went here, here. So if we were to come there, that is we are trying to break high. So if you just took this range here, from this low, way to this high, way to this low there. Then would say that we have level 1, we have this 100% level around the 179.65 level, the way to 1.272, which happens to be around the range of 1.7986, around the 180 level, around figure level, psychological level there, moving higher. So these are all levels that we look to manage the trade accordingly. So just 186, that is what this level, the levels to maintain the trade, to manage the trade. However, the first thing to do is we need to see how, we need to see if we do break above that level. Put this over to 1984. So first thing, we maintain above this level. If we close above this level from our perspective, we still maintain this level here. The guy from the hourly can still maintain this guy. So this become targets for possible punishment. If we maintain, if we move higher, close above that level, then we can look for buys from this zone here. We look for buys around this zone here. Had some selling pressure. And ideally, we would want to see the market then let's respect this level. We would want to see the market not move lower than this. Same with here. Currently, this is the low that we don't want to see the market respect. The first thing is to see this market push higher as this of this level to indicate possible bullish continuation. So from here, then you just come here and look at the calendar, see if there's something that could catalyze the market movement. So This is the pound. So currently you can see we have the global S&P construction PMI. What is this? We'll just take a look at it. See. So, so for this one, you know that if you have a higher than expected figure, positive bullish for the BP, some figure should be seen as negative, lower figure should be seen as negative. So let's see how this one will be looking. I like this one a bit more better. See. So this is it here. It doesn't have a lot of information. I was hoping to see one of these charts, something like this, but it seems not there. Yeah, so level of definition based on survey, purchasing, management, and construction industry. We have 50 indicates industry expansion. So if there's industry expansion, that's good for the economy, ideally. For economic health, they are said here business react quickly to market condition. So we are seeing that we are anticipating see a slight drop in the number. The forecast currently previous level at 54, currently starting to see a slight drop in this number. I'd argue that if we do not believe that this 53.5, that's not bad for the economy, we will start to see a number lower than this one. That will be an indication of a decline in industrial expansion, which may not be good for the economy and for pound. Moving lower, we can see we have the current trade balance. So let's see what this is. This is coming up with around 4:30 my time. The difference in value between imported and exported goods during the month. So actual or greater than forecast is good for currency. It's released after indicates more goods were exported than imported. So that's good also for the economy if export. The number of exports are higher than the imports purchased by the US. Export demand and currency demand are directly linked. Foreigners must buy the domestic currency to pay for the national export. Interesting. Export demands also impact production price. So the currency C also is expecting a slight drop. No, this is an interest rate from negative 1.3 to negative 1.0. Slight increase. You can see that the last one is around November period where we moved lower. We came from negative 1.5, so we are anticipating to see a slight increase. We went a bit lower, we've been hitting low levels sometime. The last time that we were on target as the forecast was in September. Previously also when we got numbers in August, lower numbers. Ideally from January it hasn't been that bad, but you can see we had two positive. So January we started the year with negative, but we're moving lately towards the negative. We've been slightly moving towards negative as compared to, you can see in January we were all the way from the positive number before we started towards the negative. I want to see if we maintain get something better than this, the forecast. If you move to something like 0.9, that will be very good for the economy. And we will see that strengthen from that. Just we have from that is the PMI, the level of the efficient survey purchasing. So industry expansion as well, so similar to whatever you'll be getting for the pound. Here you're seeing, you can see previous few months. October we have greater than expected. In November 6th we had failed slight drop. Currently we are anticipating to have better numbers. So if you get better numbers for this and this year trade balance, then you can push a bit more high. So that could be a catalyst to send high, then push lower. Okay, so let's see. So days on Thursday, tomorrow. So tomorrow, so we have these numbers in home finance pay that after for the currency. maintaining it around the 0.3 and 0.2, we are expecting to move back to 0.3, which is slight increase from started release that was fairly not announced. Okay, so and from there we have the unemployment rate. These are big market movers released before the NFP. So for current unemployment, the employment change, we are expecting to have an increase in employment from 2014 to 2040 around ideally around 10k. Okay. This is that is good for the economy. And employment change, would we expect to slightly increase as well. So especially as much as expecting to employment increase, also expecting a slight decrease in employment, which is also good for the economy. So actual less than forecast. So actual less than forecast. So if you get something like 6.5, actually less than forecast, good for the countries. So those are some of the market movers that we should be with the rest of the week. So ideally, from a technical standpoint, we'll be looking to see how this market moves from here, continue to push high. So that's the 30, 15. Let me just remove this. I have a lot of noise. Changes. Then and then let's see how the market does around that. Okay, so that's it.